So good morning, everyone. My name is John Gestel. I am our client relations coordinator here. With me, as always, is Rob Bernhard, our corporate counsel, and Dayton O'Connor, our lead analyst. In this morning's office hours, we're going to be talking about film and television residuals and profit participation. We'll also be talking about music royalties, going over Q&A, things like that. But through this year, we're expecting to see many of these assets, and they're relatively new to the royalty exchange marketplace. So we wanted to make sure we had an opportunity to kind of present how they work to investors so that they kind of understand what they're looking at, the risk factors, how the cash flows, things like that. So if you do have questions about this, great. If you have questions about music, send them in also. We'll be covering all of it. So let's just get started. How film and TV residuals and profit participation work. So there are two primary types of revenue that is generated after the release of a property, residuals and profit participation. Between the two of them, residuals is more like a royalty in that it's paid to contributors to the creation of the property. So that's things like actors, writers, directors, and that's primarily paid by the guilds. So that's the Directors Guild of America, the Screen Actors Guild, and the Writers Guild of America. So that can be paid out a couple different ways. We'll get into them in a moment here, but it cycles through those guilds. So that's the first form. The second form is profit participation. Now, normally this cycles through producers, but it can also cycle through contributors to IP, but that has to be on a negotiated basis. So like, for example, if an actor, say a production company wanted to have some A-list actor as the star of their movie, what they could do is instead of paying them, $50 million, they could pay them some lesser amount, maybe $5 million, but then also agree to a profit participation in the revenue of the film. Now that income is based off the revenue from the movie, TV show, whatever it is, rather than through fixed percentages like a residual would be. So those are the two primary structures that we're working in here. So I'm sure many of you have seen the Glee asset that's up. That one, for example, is a profit participation. So it's based on the revenue generated by the property. So residuals, there are two main types of residuals that we typically see. There's the variable residual and a fixed residual. So the variable residual is percentage based on the gross income of the property. So normally that happens when it's released to markets beyond its primary release, right? So if it's a film, for example, that's in theaters, that would be when it goes to HBO or something like that. Or if it's a TV show, it gets reruns on another channel, that would start to generate that residual. And it's not uncommon for the variable residual to transition to a fixed residual after a certain number of years, just as the property gets less popular with streams, it gets to a kind of a fixed level. But that's a flat payment, not related to the income of the project, and that rate is set by the guilds. And that rate can vary. I believe normally the SAG rate is higher, about 3 times higher than the DGA or WGA rates. And that's just because of the sheer pool of possible earners from that residual type. Now, for profit participation, like we mentioned, these are contractual agreements, but it's largely based on the licensing, but not exclusively the licensing. So say you're a studio and you created a TV show and then you wanted to put it on, say it's on network television, and then you wanted to put it on Netflix, that license would be part of that revenue. And that extends beyond just the streaming to, international contracts, domestic contracts, other networks, things like that. But like we mentioned, that's normally focused on producers, but can extend to writers, actors, things like that. Rob, you have anything to add for either of these two, profit participation or residual points?
I think maybe just kind of talking about how the guilds might be just kind of a term of art where they're referred to as guilds. They kind of operate like a union. They're collectively bargained And if you're trying to draw the comparison between music, guilds wouldn't really be analogous to like a performance rights organization, any sort of collective rights organization. Their scope is much larger. They handle a lot of different issues for all of their members, but that's kind of what we're talking about. It's a guild is essentially a union when we're talking about the different participants.
Cool. So we put together this little flow chart to kind of help conceptualize all that revenue. As you can see, originates from the consumer. That's us paying for streaming services, going to the movies, whatever. Gets paid to networks, distributors, and streaming services, which then flows to the production companies or studios who have the license or who give the license to those distributors. And then that's where the payment splits out between the profit share and the guild. It all comes from the production company or the studio. And then, yeah, it's just based on the agreements. But it's all very contractually bound. So why that's relevant is because of streaming. So streaming in the film and TV world is still considered a relatively new phenomenon. And there's still lots of debates happening around how new media gets paid out. New media being the type of contract that streaming falls into. It also applies to like things like web series or direct to release digitally. So those kinds of new formats. So traditionally, there was separations between the production company, the studio, the network, the distributor. They were all separate entities. And just in the last like 5 years or so, we're starting to see these conglomerates kind of merge together. Notable ones would be like Netflix and Netflix Studios, or Disney and Disney Plus, where everything is falling in under the same vertical, the same umbrella of a corporate entity. Now, where this becomes an issue is because a lot of this stuff is based on licensing, which traditionally was between an independent studio and an independent distributor, right? So there was incentive from the studios to get a higher fee, which translated to the profit participation and the residual payments. And so it's incentive for the contributors to the IP as well. But now that you have the studio under the same umbrella as the distributor, you don't have that same kind of incentive for a higher license fee because it hurts the parent company, right? Because they end up paying for their own content. So that has introduced things like the affiliate transaction provision, which is pretty common in contracts now, or the imputed license fee, which is another way that creators kind of protect the value of their IP. And basically what this means is that the license fee paid between the studio and the distributor needs to stay at what would be considered market value for similar properties, right? So that would be like comparing a cooking show and the license fee paid for that compared to one that you created under your own network. So you have to pay a similar fee. That's what that affiliate transaction provision is. It's making sure that the affiliates don't underpay for similar properties. But it's causing a lot of litigious issues as people are kind of debating, well, what's considered market value? What's considered a similar property, and all these questions, which are making it a little bit convoluted. There have been several court, forgive me, the word's escaping me, rulings that have kind of tended towards creators to kind of protect them and make sure that they're getting paid fairly, but it's still an ongoing issue. I'm sure many of you have already heard about the WGA strike, what's going on now, and that's part about AI, but part about the residual payments through new media. But because of this new structure, it's kind of upending everything. So it's something we'll be keeping an eye on. It's still a certainly lucrative opportunity to buy any of this stuff because the content is still being consumed and it's a lot easier to consume it, just like music streaming. But the shape it takes is something that we'll need to be mindful of. Whether it's residuals or profit participation, it's because they do have different risk factors in how they work. Rob, anything you want to add to how streaming impacts film and TV residuals?
Nope, I don't think so.
Okay, cool. This is something we're going to keep an eye on. If you have questions about this stuff with any new assets that come up, like for example, the Glee one, let us know. We're still learning about it as everyone else is, just because it's relatively new in our universe. If any of you are all access members, we just released kind of a deeper dive into this stuff, which gets a little bit more into the nitty gritty of the percentages and how it splits out and what constitutes what. So it's a little bit more in depth, but this is kind of the broad strokes. What are the issues? How does it pay out? So with all that stuff covered, we can get into our Q&A here. We had you submit questions to sign up. We're going to go through those questions. Again, as I mentioned previously, if you do have questions while we go through this, please put them through the Q&A so we can address them. Just a little bit easier for us to manage. We're just going to go through them step by step here, just one after the next. So first one that I see here is, can you trade assets if the other party is interested? Not on royalty exchange. We have to do a transaction on the market, and we don't facilitate a direct trade. We're just not built for that. So that functionality doesn't really exist yet. We probably won't put it together, to be honest, but anything's possible, I suppose. Rob, anything that you want to speak to trading assets?
No, you covered it.
All right, great. Next one here. What kind of capital do you recommend I begin to set aside in investing in music royalties? That's really up to the individual investor and what they want to do and what they can afford and what they're comfortable with. The low end of assets is in the 5 to 10K range. So if you want to start small, that's kind of the range you need to be in. But ultimately, it really depends on your portfolio and what you want to do. Next here, once you acquire the publishing, will the artist know who you are or anything about who owns their publishing? So maybe the seller of the royalties would know. You are signing a direct contract with the seller. If that happens to be the performing artist, then yes, they'd be aware. Otherwise, though, if you were buying royalties from some songwriter who contributed to like a Drake song, Drake probably doesn't know or care that this individual sold their rights and wouldn't be aware of it. So it really depends on who's actually selling. On top of that, we're not talking about control of the publishing. That is not something that we include on our listings very often. So they would still maintain control of everything. Yeah, it would just be if it was on contracts that they would really be aware. Break down the pros and cons of long-term and short-term holding periods. That's easy and difficult. I mean, the pros of long-term holding periods is that your earnings horizon is a long time. Short-term holding periods, the pros are normally you pay a smaller multiple, and so your return threshold is quicker, just because the earning life is shorter. In a nutshell. I mean, Dayton, Rob, anything you guys want to add to that?
Could there be a tax implication, Rob, depending on the holding period? If you hold an asset for a certain period of time, that there may be tax benefits that an investor could enjoy than if they're reselling quickly?
Yeah, so there's a couple different ways that you can handle the purchase of a royalty asset. Definitely want to check with your tax advisor for your specific situation, but the amortization period, if you choose to do that, is typically 10 years. So if you owned it for less than that, you wouldn't get the full benefit of the amortization if it's available to you. But again, you definitely want to check with your tax advisor on the best way to handle all that.
Cool. And we also have a blog post on amortization if that's something you're interested in. We have a couple different suggestions of ways to do it. But yeah, I mean, talk to your tax advisor for sure. Next one here, will auctions be available 24/7? So auctions are a bit infrequent, but assets are available 24/7. So if you were to sign up at 3 o'clock in the morning and see what's available and make offers, you're more than welcome to do that. We work on regular business hours. So, when agreements get to you and things start to really move, would have to be during regular business hours. But yeah, I mean, everything's up there and viewable all the time. So yeah, 24/7. Where are my royalties custodied? That really depends on the asset. So we Royalty Exchange act as the administrator for everything that transacts on the site. But the origination point of the royalties can vary. So whether they come from, a publisher or a PRO or whatever, if you would consider that the custodian versus Royalty Exchange as the admin, that's kind of up to you and how you would define that. Rob, do you want to add to that at all? I mean,
Yeah, so the way that the transactions work on Royalty Exchange, if you haven't purchased something before, is that we'll show all of the earnings history and get that directly from whoever distributes those royalties. Once the purchase has been made, we have a letter of direction sent to that distributor for payments to go to Royalty Exchange, and then what we do is we keep track of who owns what royalty, and then we collect the payments and send them back out. In most cases, the assets you purchase, you'll be able to put right back up on the marketplace to receive any offers if they come in, if you're interested. So Royalty Exchange is the administrator of any asset that sells on Royalty Exchange, unless there's a copyright involved or something like that. But again, like John said, that's kind of a rare scenario.
all right, next one here. What is dollar age and how can I use it to invest? Dollar age is really important. Dollar age is effectively a measure we use to help to determine the consistency of the earnings over time based on the age, contributing songs, various other factors of a catalog. So it is a weighted measure based on the overall contribution of the tracks included, but it helps us determine where in the earnings life a song is or a catalog. For music, traditionally, you have your early release, which has a huge spike in earnings as it gets on radio, streaming, playlists, stuff like that. Pretty common. Then after that initial earnings spike, the earnings will drop off. How far they drop off and how much they decline is anyone's guess, but ultimately they tend to stabilize in what we call the tail of the earnings after a number of years. Normally it's like, I would say more than 6 years where we see it, but that also can vary. So the dollar age helps you measure where along that earnings life a catalog might be. So the higher the dollar age, typically the more stable the earnings, because it's kind of gotten to that regular listenership consumption habit. So that's how you can use it to invest, kind of as a way to measure your volatility of earnings. But it is an imperfect system. So always take the full picture of a catalog into account when running any evaluation. Where it's earning, what the content is, also matters. Dayton, Rob, anything you guys want to add to dollar age?
Nope.
Okay, cool. Next one here. How fast do you usually see a return on your investment? Well, that depends on when you buy. Every company that provides royalties pays out on a different schedule. Most commonly, we see royalties paid out on a quarterly basis, but some will pay monthly, some will pay annually, some will pay biannually. So on every listing, we'll include a period by period graph, which will show you the distribution frequency, but it varies. And then, your ultimate return also depends on how well it performs, right? So say you get a heavy sink after the first month and you recoup your full investment amount in one pay period, then it's really fast. Say earnings decline and it does worse than you expect, then your ultimate return would take longer. So it really does vary from asset to asset and how frequently the catalog pays out. All right, next one. What is the average length of term for the royalty investments offered and the average ROI? Well, average term, I mean, we have a few different fixed term lengths, 10 years, 30 years, or life of rights. So I don't know, I guess we have more life of rights. Dayton, what would you say?
Yeah, we generally have more life of rights assets available for purchase and being acquired by investors at this point. the average length of term for royalty investments offered. Maybe there's an implication about reselling assets there, but I don't know like the average length of time investors are holding on to those offhand. So I would just use the term that is being put to the asset that you're looking at on the exchange.
Yeah. Okay.
Average ROI, typically it's been around 13% for 10-year life of rights assets across all transactions that we've seen.
Cool. Awesome. Next one here, will royalties be remitted to foreign owners? Australia, in my case, yes. We work with tons of international investors, so that's no problem. You get set up in Payment Hub, which is our admin portal, and we would remit payment to whichever account you specify. So yeah, that's no problem. Next one here, how do you price your masters? Dayton, you want to talk about pricing and valuations and stuff?
I think that you would price your masters in much the same way that you would price any other music related asset that you would be evaluating on the exchange. You would consider the term that is being offered for that particular asset, whether it's 10-year life of rights, something you're going to hold for an indefinite period over the life of the asset, it's going to have more value. The dollar age, as we've discussed before, that's the a really important rule of thumb to consider. The potential future value and predictability of future distributions as a function of the age of the catalog. You'd also want to consider if you're looking at a particular asset, what's the mix of incomes that's coming in for that? So for masters, you have generally reflected in those royalties, much of the value is going to be based on streaming at this point. It's pretty typical for that sort of asset, but you also have the ability to collect on different types of fees baked into that as well. If you're acquiring the masters, you may also have the option to, in those, get the benefit of sync licenses. So if something is being placed into a film, TV show, or advertising campaign, then you may be getting a sync fee as a function of that placement. So considering where that money is coming from is also going to be important as well.
Cool. Next one here, how can we boost our portfolio profits? So you can't really, besides listening to the music. But control of the IP is not something that we typically include in this stuff. It's meant to be passive. So yeah, you don't really have any way to manipulate the earnings or anything like that, unless you were to buy the copyrights, which again, super rare. Dana, or anything else you want to kind of elaborate on there? I mean,
or if you happen to be a music supervisor and want to put a bunch of the music that you bought the royalties for into your projects.
right.
Yeah. So yeah, the almost all royalty assets on royalty exchange are intentionally set up so that they're passive investments. You're investing alongside whoever the ultimate IP owner is, typically songwriters, publishers, artists, and labels.
Next one here, why was it important to be verified on royalty exchange? So actually very important. With an online marketplace, there is inherently a degree of trust that needs to happen from all parties involved for the market to be successful. Sellers trust that the offers coming to them are legitimate. Buyers trust that the offers that they're buying are legitimate. So we have to vet everyone who's participating to make sure that we don't have bad actors, to make sure it's a safe place to invest and sell royalties. So just like how every artist who comes to us and wants to sell goes through a due diligence process, every buyer does as well. If you've bought before, you know that our payment terms are pretty fast. We have contractual obligations we have to meet with sellers. So those payments need to happen in a timely manner. And we need to make sure that buyers are serious and capable and can actually make those payments in a timely manner. So all of that goes into why the verification process exists. It's pretty quick and easy, but it is an important step just to protect the integrity of the market and to make sure that everyone who's participating understands and is a real investor. Rob, anything you want to add on to the verification process?
Nope.
Cool. Next one, this question just says, identifying projects to invest in. That's really up to you. We aren't financial advisors, so we can't really tell you what to invest in. All we can arm you with is the facts and the information about any given catalog, but ultimately what to invest in is up to you. So, take the metrics, the dollar age, the earnings history, take all that into account. If you have questions about something, you're always welcome to ask us, but ultimately it's up to you and what fits with your investment strategy, portfolio, style, etc. Next question here. How much can I bid on, or can everyone get a piece of the royalty? So all assets are one-to-one purchases between a single buyer and a single seller. But anyone could buy a catalog. So if you wanted to put a bid on every single listing on the exchange, you are welcome to do that. Just bear in mind, anything that gets accepted, you are legally bound to buy. So, take that as you will. There's no limit to how much you can offer, but you are bound to move forward if anything gets accepted. Next question here just says terms of use. Our terms of use are pretty straightforward. You can just go to a royalty exchange terms of use and read all about it there. The highlights are offers are binding, 2 days to pay. Yeah, those are the big ones for investors. Rob, you don't have anything to add for terms of use? No, we act as the admin. That's
Right.
important.
Right. Yep. No, I think if you're interested, just go click the link on the website and read through it. Make sure you understand.
Yep. Next one here. Is it possible to submit a catalog for evaluation requests for a third-party artist I am affiliated with? Yeah. We're happy to run an evaluation. Just reach out to us. We'll need to review the earnings statements for the catalog. So as long as you have access to that, yeah, we do that every day. So just let us know. How much monies do we need to buy royalties as a first investor? Well, I think I mentioned earlier on the low end assets will transact in the $5,000 to $10,000 range. So that's a good place to start. But ultimately it's up to you and what you're interested in. Next one here. Do I receive a royalty when music is streamed on streaming services? How do I verify that in the listing? Typically, yes, you do. Most catalogs will have a streaming component to them. On our table of included rights, we'll include where it will earn there. There'll be a little snippet at the bottom. Most of the time it includes streaming. But you can also review the raw data file. Every listing will have the raw data file, and that is the actual raw earnings for that catalog. And most of them will include a streaming component and will be noted there. It might be noted through the source earnings, or it could be in who the royalty payor is or licensor is, in which case it might be like Spotify or Pandora or something like that. But yeah, that's always going to be in that raw data. So you can always take a look there. Dayton or Rob, anything you guys want to add to the streaming component?
Nope.
Great. Next one here. What is the best way to get started? Do you have investors using self-directed IRA funds? We do. We do have investors using self-directed IRAs. They must be self-directed, just because, again, referring back to our payment timelines, if you're buying through a traditional IRA, typically the time it takes to move funds out of an IRA breaches our payment timeline. So it does have to be self-directed. We will also request that you get letters of pre-approval if we can. If there's no custodian, sometimes it's not necessarily doable. And then we also have a partnership with Alto IRA. So they work in alternative investments. So you can buy easily if you have an Alto IRA account. Just let us know that you want to do that and we'll take care of the rest. So yes, you can use an IRA with caveats. And then getting started, just find something you like and make an offer. That's really the best way. Just get involved. Next one here. How does the site filter copyright assets? How does the site verify what's being sold? What are the returns paid? First part of that question, how does the site filter copyright assets? We'll make a note on the listing. You can just search copyrights in the search bar, and if it yields anything, then that will be what you want to look at. But like we said, copyright assets are pretty rare. So they do come up, but it's just really unusual. How does the site verify what's being sold? Rob, you want to talk about diligence?
Yeah, for sure. So anytime a seller wants to put an asset on the marketplace, we do a few things. First, we determine that they are who they say they are, that they own what they say they own, and then that they have the ability to transfer that. So that includes a background check, lien check to see if there's any encumbrances on the person's assets as a whole. We also connect directly with their distributor, and we will determine whether there are any contractual rights that we need to abide by, like a matching right or a negotiation right. We'll have the distributor verify whether there are any claims or disputes on the account that would prohibit that seller from selling, and we get all of the actual royalty data that you see on the listings directly from the distributor as well.
Cool. And then the last one, how are the returns paid? As we mentioned a few times, we act as the administrator. So your royalty payments ultimately come from us, Royalty Exchange. So once you buy an asset, part of that closing procedure is you're going to get a W-9 or a W-8 BEN if you're an international buyer. And then we'll set you up in our admin portal. That's where you'll specify your banking information, how you wanted to receive stuff moving forward. And that's how the returns are paid, to whatever account you specify there. So it's pretty straightforward, pretty simple procedure. Next question here, how can you make the barrier to enter more accessible to general investors? So two different sides to this question. First is the verification, which is pretty straightforward. It's not a ton required to get verified. So that's not likely to change. The second is price point. Price point is also tough. First and foremost, because royalties inherently, the strength of the property is dependent on the earnings, right? Because it's based on consumption. So if a song isn't earning at a certain level, then it's not being listened to, and that makes it a risky asset, right? So we have our thresholds set pretty low in some cases, enough that we can, divine trends and view listenership and kind of extrapolate an understanding of the IP that way. But ultimately, if something's earning at too low a level, it's not a safe thing to invest in. So the price of an asset actually does matter as far as the legitimacy goes. So that's the other side of it, and not something that's a little bit outside of our control. So we're always open to ideas, but there's only so much that we can do to make sure that the market functions appropriately and offers legitimate assets to legitimate buyers. So Rob, Dana, I don't know if you guys have anything else you want to add to that.
I think the only thing that I'd add to that is in terms of pricing, I think that you're going to find a mix of assets on the exchange that are priced to the point that make them accessible to almost any level of investor, especially some of our PRO assets from ASCAP and BMI that are based on small income streams. But I was having the thought when this question was coming up, we do definitely get the benefit from positive coverage in the media about music transactions. So we find that a lot of people come to the site having heard about the value they can get out of selling their royalties from articles in Billboard or the New York Times. So exposure and bringing that to potential sellers and investors, I think, is probably the biggest barrier, and something that we've seen been overcome over the past few years as a function of positive media coverage.
Cool. Next question here says, what TV show intro do you offer? Well, right now, the only TV show we have up is the Glee asset. But as I mentioned earlier, we expect more TV and film type assets to come to market, which is why the bulk of this was on film and TV profits. And that leads into our next question here. How is film and television revenue calculated? Is it per play or a fee for a certain period the film is run? Great question. It's a bit of both, honestly. So whenever a property is created, those initial contracts for the intended use need to be penned with the guilds, so that they can understand what the payout's going to be. And that can vary based on how it's going to go, whether it's a new media contract or a broadcast television contract or whatever it might be. and also for the budget of the production can also impact those numbers. So in some cases, it can be on a per play basis. In some cases, it can be on a license fee. And then also, obviously, how long it's run. Like if it's a TV show with 10 seasons, that's going to pay differently than like a movie that's, you know, out for 10 years. It's all going to have a different structure. So yeah, it's a combination of both, depending on the age, style, type, tons of other factors for the actual production. Rob, anything you want to add to revenue structure?
Nope, you covered it.
Next one here. When you purchase a music royalty, do you become the assignee of record and receive direct payments from ASCAP, BMI, etc.? No, you do not. Like we said, we act as the admin. So you get your payments from us. We become the administrator on the royalty account. So that way we can effectively facilitate transactions, make sure that everything is handled appropriately. If there's any issues that come up with the assignments, we handle it. We take care of it. We make sure that everything is legitimate. So yeah, you do not become the assignee of record. We do.
Yeah, and royalty exchange as the administrator, you know, as the marketplace, once you purchase an asset and that asset enters our ecosystem, it's on the marketplace, it lives there. You'll be able to field offers from other investors who'd be interested in purchasing that catalog. We handle any issues that arise with the distributor, and then it also makes that the secondary transaction much easier on your end as well. And at a lower fee if you were to actually sell it on the marketplace.
Awesome. Next one here, again on streaming and residuals. I've heard streaming services are less likely to pay residuals. Does this change the type of investment long-term outlook? So it's not that they're less likely, it's just that the structure is still kind of getting ironed out, and that the new media negotiations are still kind of ongoing. They are a bit more firm now, especially as streaming services are becoming more and more of a powerhouse player in the film and TV residual space. But I don't think that those earnings will ever go away, just because the unions, the guilds are pretty influential. Even the writer's strike right now is impactful. So I don't think that the long-term outlook is really jeopardized. Really what's up for question is on the profit participation side, how those future negotiations look. Just as we were discussing earlier, a big component of the affiliate transaction provision is it's a sales comparison. And so a sales comparison infers and assumes certain similarities between properties to make a comparison. And that's a gray area. And so how you compare those things and quantify that becomes difficult. But again, you know, like I don't think that there's a lot of opportunity for these larger conglomerates to cut out the people and producers and people who make this stuff, just because, you know, they'd suffer quite a bit on the content side, and that would impact bottom line, I think pretty much across the board. So yeah, that's my opinion. We'll have to wait and see. Ultimately, you know, we can't guess how it's all going to go, but it'd be very difficult for streaming platforms to kind of work around that payout. Robert, Dane, anything you guys want to add to that? Next one here, can I claim depreciation for taxes on the amount I pay for these rights? Rob, kick that over to you.
Yeah, actually, yeah, amortization is what you would do, and I've got the link here of the blog post, and this will explain it pretty well. Let me throw it in. I guess it'll have to be the Q&A. Nope, I can't figure out how to.
You put it in the chat.
It won't let me. It won't let me send it to host and panelists. So we'll figure it out. But yeah, there's a post on it that's helpful called amortizing royalties. Honestly, you just Google amortization and royalty exchange. It'll probably be the first hit. But in the meantime, I'll try to figure out how to get this link over to you.
Whoever submitted that question, once we kind of wrap up here, I'll make sure it gets posted in the chat so you have access to it. Okay, next one here. How do we increase the pay rate for streaming? You don't. There are governing bodies who do that. Like, for example, the Copyright Royalty Board, they would be an example. Who, if you've been with us, I'm sure you've heard us talk about the Copyright Royalty Board. But yeah, there are bodies in place that dictate that. You as an individual investor do not have any say in that. Rob, Dayton, anything you want to add to the streaming royalty rates?
Nope.
Cool. Next one here, how to make sure residuals aren't depleted by bogus or exaggerated costs. So just because this individual said residuals, I'm going to assume they're talking about film and television because residuals are different from royalties. Not a whole lot that you could do about this, but again, these are legitimate businesses and you just be buying a piece, so that you have to assume that there are lots of other individuals, companies, etc., who are viewing these and also earning and would be overseeing that. Again, speaking to the passive interest in investing alongside major stakeholders is kind of the strength here, because it doesn't require anything of you. Of course, anything can happen, so I'm not going to say that can't happen, but like we said, we do due diligence, we make sure everything's legitimate, so that kind of bogus or exaggerated costs are pretty difficult, I would say. But again, major stakeholders in that revenue would be on the lookout for that. And that's, yeah. Rob, anything you want to speak to that? It's kind of a diligence question, but kind of not.
No, you covered it.
Okay, cool.
I would say if you're an investor, you're going to have the chance to look at whatever asset you're considering acquiring before you put in the bid and pick it up. So you'll have a chance to see what revenue streams are. And for residuals, you should also be able to see in a given listing what the potential costs are that are associated with that.
Yeah, like a profit participation revenue raw data specifically, it effectively looks like a P&L sheet. So it will have the cost breakdown and the revenue associated. So it's pretty clear in that. Yeah, but that's again different from residuals, how those pay out. Residuals is pretty fixed based on the guilds. Next question here, when are payments issued? So we pay out royalty distributions as we receive them. Our admin terms do hold a 30-day payment window for us to turn payments around. We don't really need it. We really just hold that in case there's something that comes up, something inconsistent that we need to deal with, and that just affords us the time to make sure everything gets corrected. Right now, I think our average payout turnarounds is like between 7 or 10 days, maybe less, depending on who the royalty payor is. And then, of course, different distribution periods may take longer just based on this sheer volume of distributions. Like, for example, our I think it's the April and the September distributions is the largest concentration of distribution amounts, just because you have quarterly, monthly, annually, and biannually paying out all at the same time. So those two pay periods tend to be a little bit slower just because it takes us longer to get through it all. But yeah, normally it's just a few days. One more to that point is that the payment dates for any royalty payor, typically they have their distribution schedule posted on their website. Like, for example, ASCAP and BMI definitely have it. Several others do as well. So you can always just search on their website, ASCAP's distribution schedule, and pull everything up there. So a lot of that stuff is viewable online. Next one here, how do you calculate the theoretical IRR? And how is it different than a traditional IRR calculation? Dayton, you want to talk about our IRR stuff?
Sure. And for the investor that brought this question up, I'm guessing that you saw reference to theoretical IRR on one of our auction listings. You can see that in the financials page for those listings. The theoretical part in theoretical IRR, that just refers to the effect that the bid pricing has on the IRR percentage calculated that is reflected on that auction listing, which is a function of the forecast for royalties that we generated for that listing. So if you go into a given auction listing that goes into the theoretical IRR, you'll see that for that asset, there is a set of 10-year cash flows that we forecasted, which is based on a lot of the a lot of stuff that we talked about in this Q&A. It's taking a look at the dollar age for that particular asset. It's taking a look at ways that we, that we can look at normalizing those cash flows for historic earnings by taking out some of the outlier payments or potential adjustments. And once that 10-year cash flow is forecasted, there's going to be an IRR that's associated with that forecasted 10-year cash flow based on whatever the bid pricing is for that particular asset. So it's theoretical in that this is a forecasted cash flow. We can't guarantee the earnings for any of the listings that are going up on the exchange. And we also are, it's a function of when those bids come in and how much an investor is willing to pay for that asset, which is going to change that IRR percentage that's associated with the theoretical returns based on that forecasted cash flow.
Awesome. Well, anything, Rob, you want to add to that?
Nope.
All right, next one here. I would like to know how to get funding to invest in the opportunities which come available. So investors are responsible for funding their own assets. We do not provide funding or anything like that. So that's up to you. If you are successful in getting outside funding, tell us about it. People ask me all the time, and I think I've had one instance ever where an investor successfully acquired outside funding from like a financial institution or anything like that. So yeah, I'm interested. Let us know. I'd love to be able to say it to investors rather than one. But yeah, it's up to you as the investor to fund your own assets. Also part of why we have our verification process and make sure that people can fund their own assets. Next question here. Why, when a proxy is set, there's a $200 jump up from the previous offer, but on a live offer, an increase of US $1 is allowed? So this is a function of how the proxy offers work. The proxy is designed to be a set it and walk away. If we were increasing offers on a $1 basis on a $100,000 asset, it would be very frivolous and it would take a lot of time and it would be kind of moot. So the reason why a live offer can be a dollar increment is because they can offer whatever they want on a live basis. But the proxy is designed to be incremental to reach a goal. So if it was too small of an increment, then it wouldn't be effective. So it's really a function of balance between small increases and not being frivolous, basically. Robert, Dayton, anything you guys want to kind of add to that? Yeah, okay, great. Next one here is a film and television royalty more riskful as a music royalty, as in are film and television assets more risky than music assets? I wouldn't say so. Granted, the consumption is different, but there's still plenty of replayability between quality film and television content as there is with music. So there's a lot of overlap in how they're consumed, while they are fundamentally different. But I'm not sure that I could ascribe a higher risk profile to one versus the other, because it really depends on the property and depends on how it's being consumed. Robert, Dayton, anything you guys want to add to that? Cool. All right, so last question here. For transparency, will Royalty Exchange start requiring current quarterly royalty payments posted? Many still only show 2022. So every asset that's available actually has the most up-to-date data that is available. It's not uncommon for royalty distribution companies to pay out on a delay. Sometimes a 2-quarter delay. So everything that's up there is the most up-to-date. If you wanted to kind of clarify that, I would say look at, for example, BMI's distribution calendar, where they'll say, okay, the April distribution covered the period of fourth quarter 2022 or whatever it is on their site. So that will show you that the most recent payment is the most up-to-date data. So yeah, it is the answer there. Robert Dayton, anything to add to that?
No, just to reiterate that what you're looking at on the listings is the performance or earn period. Like you said, that will often be paid out later. So the pay date will be, a quarter, maybe even two in the future. So it's always the most recent is what you're looking at.
Yeah. And just to bear in mind, not every distributor pays out on a quarterly basis. There are many publishers, for example, that will pay out royalties on a semi-annual basis. So in those cases, for example, the most recent payment that we'd ever have on file would be for the second half 2022 royalties. Those are typically paid somewhere between 45 to 90 days post the resolution of the performance period that's reflected in those statements. So you're not going to see any 2023 royalties for those distributors, for example, until sometime likely in August to the end of September.
Awesome. Cool. All right, so that covers it for the submitted questions. I do see we've got at least one Q&A submitted question here. What admin fees do you guys charge? Great question. We don't charge any admin fees. There's no percentage carry. There's no flat fee. There's nothing. We only charge a fee on a transaction basis. So when you buy or sell an asset, there's a fee there, but that's it. Our admin service is a free service we provide. So there's no take for that, no fee. Any other questions here? Give you guys a few minutes to formulate stuff. Again, send to the Q&A. If you're making a question and we're waiting and you're just not done, raise your hand so we can see and we can give you time. If not, we'll just give you guys a few minutes here. Now is the time when we need Jeopardy music playing in the background.
We need to buy the rights for that.
Maybe we can offer the royalties to Jeopardy.
Oh my God, that'd be amazing.
That would be amazing. All right, I'm not seeing any hands here. Not seeing any additional questions coming in. One more minute for questions, and then we will conclude this office hours session. Oh, and let me Rob, will you send me that link that you wanted to share?
Oh, sure. Yeah. One second.
All right, question here. How has the market changed recently? So a couple different ways. First is, as I'm sure you've all seen, we've updated the interface. So that's search functionality is way different. From a pricing perspective, everything has gone up just because more people are discovering royalties as an investment opportunity, but also higher quality assets have been coming to us, which constitute a higher price. So we've been seeing a lot of that. So activity's up, new opportunities are up, new buyers are up pretty much across the board. And we got a couple more improvements coming to the exchange, I'd say this year, which is going to be a bit more dynamic, more information to digest for any given asset. So in a lot of different ways. Yeah, Robert, Dayton, anything you guys want to add to how it's changed?
Nope.
Okay. Daniel, I hope that answers your question appropriately. If you had something specific you wanted to hear about, shoot me a note. Question here. Do you have a chart of all assets traded through Royalty Exchange on which you can see the earnings develop compared to dollar age and for each right, mechanical, public performance, sync, etc.? We do, but that's not outward facing. That's not something that we share. So it's not available, unfortunately. We get asked for that quite a bit, but it's not something that we share outwardly. All the information is there, though. It's all on the exchange if you wanted to go review it. We just don't aggregate it for investors. Any other questions here? And for those of you who are interested, we put the amortizing royalties post in the chat. Everyone should be able to see that. Also take a look. That will help with the tax questions and things like that. All right, last question is going once. Last question is going twice. Okay. If there are no further questions, we're going to conclude this office hours. Thank you all for attending. I hope this was helpful and informative, particularly with the film and TV stuff, since that's pretty new. If other questions come to you after we've concluded here, send them my way. You all should know how to get a hold of me at this point. Again, I'm John Gestel, Client Relations Coordinator here at Royalty Exchange. With me, as always, is Dayton O'Connor, our lead analyst, and Rob Bernhardt, our corporate counsel. We do these every quarter. Always happy to answer questions, talk about assets that are coming to the site, leaving the site, up on the site, answer your questions. So yeah, thanks for attending. There will be a recording of this if you want to review it. And yeah, best of luck with your investments.
Thanks, Sean.
Thanks, everyone.